Alright, ladies and gentlemen, welcome back once again, and in this video I'm going to show you how you can use the trade bracket strategy to execute your trade. Right, but before I do that, I want to make two disclaimers. Okay, the first disclaimer is trading is very risky and you can lose a lot of money. All right, so this is not financial advice. Trade at your own risk. All right, and the second disclaimer is I don't do account management. I don't do investments. I don't inbox people asking for money. Right, so be aware of scammers. Okay, then lastly, what I want to mention is if you're finding trouble understanding the things that I'm going to talk about in this video, okay, you should go back and watch the very first two videos that I did make about this strategy. Okay, so I'll leave the links in the description. Okay, those videos right there go in depth when it comes to explaining the ins and outs of the strategy. All right, so now let's begin. So the very first thing is you want to begin on a higher time frame. Okay, you want to begin on the 4-hour time frame. Okay, and then you want to wait, or you want to look for a break of a high or a low on the 4-hour time frame. Okay, so let me go ahead and mark some structure. So the market made a push, made a pullback, then it pushed again. Right, so until this point, okay, it created this break right here on the 4-hour chart. All right, so let me go ahead and mark this. All right, so this break on the 4-hour time frame, okay, to the downside, okay, this right here confirms to us our directional bias, okay, which is the market is moving to the downside. Okay, and with that being said, we should only be looking for sells. Okay, let me say that again. Since we created a break to the downside, okay, we are only looking for sells. All right, so let me go ahead and mark this. So this right here is our 4-hour break. All right, so here is the 4-hour break, and right here is the 4-hour lower high. Right, then down here is the 4-hour lower low. Right, all right, so now marking this point right here, like I said, we broke this low right here, so our directional bias is to the downside. Okay, but the next move of the market from this point, okay, we expect it to make a pullback. All right, then continue to the downside. All right, so the whole logic of this strategy, okay, we want to capitalize on this pullback right here. Okay, this pullback right here is what we want to capitalize on, because it's where we shall enter our trade and exit our trade, like I will show you later on. All right, so now let me delete this. Go ahead and delete this. All right, so now let me go to the lower time frame, which is the 15-minute time frame. Okay, on the 15-minute time frame is when we shall mark this market structure. Okay, but this is something I want to say. So this, on the 15-minute time frame, this right here will be in an uptrend. Okay, that doesn't mean that the bias of the market has changed, because the overall direction or the overall bias of the market is to the downside. Don't forget that. Okay, so this pullback right here will be in an uptrend, but that doesn't mean the directional bias has changed. It's just pulling back, and when price is pulling back, it will make the similar moves as it will make when it's in an uptrend. Okay, so don't forget that. Okay, don't be confused by this pullback. Okay, all right, so let me go now to the 15-minute time frame and then mark the market structure. All right, so I'll have to scroll all the way back. Okay, so let me scroll all the way back, and this is the beauty of this strategy. Okay, guys, make sure you test this strategy on your demo account before you apply it to your live account. Okay, so don't just jump on your live account, go ahead and first back test it. And when you understand the strategy, then you can go ahead and apply it on your live account. All right, so let me scroll back, let me keep scrolling back. All right, so this is the point that we marked on a higher time frame. So next thing is we want to mark this pullback right here, right? So we want to mark this pullback, okay, all the way from down here to up here, right? And guys, like I said, you want to learn how to mark your market structure. It is very, very, very important, right? All right, so let me go ahead and start marking the market structure. So price was right here, all right? So it made a push, all right? It made a pullback, okay? Then push. Let me mark first, I'll explain later. Okay, then it made a pullback, made an impulsive move, retracement, impulsive move, retracement, impulsive move, right? So until that point, all right? So now this is why it's very important for you to know how to mark your market structure, okay? Because so many people will mark this as a higher high, but this is not a higher high. This is an internal high in this high right here. That's why you need to learn how to mark your market structure, right? All right, so let me go ahead. So this, as you can see, this right here is a break, okay? This right here is a break. This right here is a break to the upside, okay? This right here is a break, all right? Then this right here will be, so let me go ahead. This right here will be our higher low, right? So I don't want to do it again, so I'm just gonna copy and paste. So Control C, Control V. I'm gonna paste it several times, right? So I'm just clicking paste, 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 okay? So it will create many more instances of these what I've just copied, right? So let me move them, right? Because I didn't want to do it again. So this right here will also be a higher low. This right here will be a higher low, right? So let me go ahead and now do the higher highs. So just higher highs, right? So let me drag it to the point where I want it. All right, so this right here will be a higher high. So Control C, Control V so many times, right? I'm just doing it over and over again because I don't want to do it, all right? So just pull it right here, pull it right here, pull it right here. Okay, so this was the last higher high. Guys, if you don't know what I'm doing right now, like I said, the two videos that I made, all right, explain all this. So the links will be in the description below, right? So let me go ahead and delete this. All right, as you can see, we've marked our structure of this pullback on the 15-minute chart, okay? So the next thing we want to, as if you don't know by now, okay, the strategy comes into play when we get a break of the last higher low. Since this was a pullback to the upside, okay, this was a pullback to the upside, so we want to get a break of the last higher low to be created, okay? That's when the strategy comes in play, all right? But before that, let me explain something, okay? So I want to explain the use of alerts, okay? So we use alerts and pending orders, okay, to our advantage, because we don't want to sit on the chart to wait for this market structure to form and to wait for this break to form, okay? So now let me show you something. So let me get this cross right here. So this pullback started all the way down here, okay? And I want you to pay attention where to the down of the chart, okay, of this window right here, okay? It says 3rd September 2025, okay, and it says 7:30, okay? So that's the lowest point of this pullback, okay? And the highest point was on 4th September 2025, 15 minutes past 15, which is quarter past 3, all right? Now you can see that this structure right here took a long time to form, okay? It took a day, right? It took some time to form. So you don't want to be sitting on your chart, okay, just to wait for this structure to form, okay? And if I go ahead and just use this, okay, because I want to see where we got the break of this last higher low. Okay, we got it right here. Okay, so we got the break on the 5th September 2025, 45 minutes past 1. Okay, as you can see, the structure forming and the break of the last higher low in this case takes some time, and that's the reason why you want to use alerts, because you don't want to be sitting on your chart the whole day waiting for this structure to form. Okay, all right, now next I want to talk about, since I mentioned that you want to be using a lot, let me get the arrow back because the cross keeps highlighting so many things, right? So since I mentioned that you want to use alert, okay, now you want to come up with a time interval at which you will be checking your chart. Okay, so as soon as you get the break, okay, on the higher time frame, okay, you want to come to a lower time frame, okay, and you want to be checking your chart at a time interval. Okay, you could choose a time interval. You could say I want to check my chart after 4 hours or 5 hours or 6 hours. Okay, the whole point is don't sit on your chart, the whole day. This is not a 9 to 5. Okay, all right, so let's say you came to your chart, okay, after 4 hours, okay, and price was right here. All right, so price was at this point right here. Okay, so what that will mean, you will go ahead and place your alert on this last higher low. Okay, then close your charts and go do something else. All right, so you just close your chart, put away your phone, just place your alert, because as soon as your alert is triggered, okay, you will receive a notification that you will come back to the chart and execute. All right, so let's say price was right here, you will mark the last higher low to be formed, and that's where you will place your alert. Okay, so let's say after 4 hours price didn't come back and hit this, instead it moved all the way up. Let's say now it moved all the way up here. Okay, so that means you will delete this alert. Okay, and according to what I've just said, the price was right here, that means this will be our last higher low, and this is where you will place your alert. Okay, all right, so I'm gonna place the alert. Okay, but since we're right here, okay, so like I said, the strategy comes into play if we break the last higher low to be created. Okay, now I want you to be very careful, guys. Okay, because this is very important. Okay, we want to get the fake breakouts and real breakouts. Okay, so this right here is a fake breakout. Okay, as you can see, price pushed all the way down, but it closed up this point right here, so we don't consider this as a break. Okay, because the wick of the candle, let me hope you know the body and the wick of the candle. Okay, so the body of the candle, this right here is a candlestick. All right, so the body of the candle is where it is shaded red. Okay, and the wick is just this thing, popping out. Okay, it can pop out on either side. It can pop out on the bottom and on the top. Okay, what you want to get, so this right here, like I said, will be a fake breakout. This is not the break we're looking for, guys. Okay, the break we're looking for a whole candle to close below, guys. We're looking for a candle to close below our higher low, like this right here. Okay, this right here pushed all the way down and the body of the candle closed below, so this right here will be the real breakout. But remember, guys, since we placed our alert right here, so this right here itself will trigger the alert, so that means you will get a notification, then come back to your chart. Okay, then first thing you want to do is analyze, did it really break? If it did not break, then you will remove so this alert will be triggered, so you will place another alert. Okay, and since this was the last higher low to be formed, you will place the alert in the same place and wait for another break. Okay, so as soon as price taps it again right here, you will receive the notification once again, and you will come back to your chart and you will confirm that this was a real breakout. Right, all right, so let me show you how you could place the alert. So if you want to place the alert, you just go right here. All right, and click this. I show this in the 2 videos that I keep talking about. Okay, the links to those videos are in the description. Okay, so just click the alert and go ahead and click create alert. All right, so the alert window comes up. Okay, so you want to use this figure right here. All right, so you want to use this figure right here. So because this is where I want to place my alert. Remember, this was the line I drew at the last higher low, right? So it says, so I'll go ahead and delete this. It says 60, right? 22. All right, so this right here is where I want to place my alert. Okay, so now the alert is on my chart right now. So let me go ahead and create some more room once again. So as you can see, I can drag this to, you know, to the point that I want. All right, so if I place it right here, like I said, I won't be on my chart. Okay, so just place the alert and wait for price to come and trigger this. All right, so as soon as it is triggered, I will get a notification, then come back. Okay, the very first thing I want to do is confirm, did it really break it for real, or it just wicked and faked and then closed up. Okay, so I want to wait for that real break. All right, so if I get the real break, next thing I want to do is draw the trade bracket. Okay, so I don't need the alert anymore because I got my break. All right, so I'll go ahead and just click that where it has that icon of the bean, right? I'll just go ahead and just, you know, click delete. Okay, so it will remove it. All right, so right now I want to draw my trade bracket. Okay, so just, you know, this is just a rectangular tool. Okay, you could go in this section right here and you can find it. All right, as you can see, I added it to my favorite. Okay, so just, I didn't mean to do that. Let me go ahead and delete that. So what I want to draw, remember, our trade bracket gives us two things. It gives us our entry and it also gives us our stop loss. Okay, and there are two ways you could draw the trade bracket. I explained everything that I'm talking about in those two videos. All right, so let me first draw it and I'll go ahead and, you know, talk about it. Right, so this right here is our trade bracket. All right, here is the trade bracket. All right, so now we got a break from right here. All right, we got a break from right here. All right, let me zoom back in. Right here is where we got the break. Okay, so we could draw the trade bracket from the last higher low to be created. This was an uptrend. Okay, it's different for the downtrend. Okay, but since this was an uptrend, we'll draw it from the last higher low to be broken to the last higher high to be made, or we can draw it from the last higher low to be broken to the last point price which is around right here. All right, so those are the two ways that we could draw our trade bracket. Okay, but remember, they have disadvantages and advantages, like I'll show you later on. Okay, so let's keep it to the last higher high to be made. Okay, so then the next thing I want to do after drawing my trade bracket is I want to measure this trade, because according to the strategy, we only take trades that are at least a 1 to 2. All right, and since this is a sell trade, okay, I want to get my short position tool and I want to place it where the last higher low to be broken. Then I want to place my stop loss to the highest. So this right here, like I said, it gives us our entry and exit. So entry, exit. All right, then I want to drag, so my exit will be the lowest point where price started this pullback. Okay, so like I said, the trade bracket gives us an entry and it also gives us our stop loss. Okay, then we go ahead and draw our exit right here. So I want to drag this and measure this. Is it at least a 1 to 2? Okay, and as you can see right here, this trade right here, if I took this trade is a 1 to 3.37. all right, but watch if I adjust my trade bracket to the highest point price reached. Okay, so this right here will be our stop loss. Okay, we will maintain our entry at that point. All right, so let me drag it all the way up right here. As you can see, the risk to reward went down. Okay, so right now it's a 1 to 2.33. So the advantages and disadvantages are, if you draw it from the last higher low to be broken to the last point price reached, you will have a less risk to reward ratio. All right, but the chances of price, okay, coming back to take you out okay, and continue in your direction will also be minimal or less. All right, so let me delete that. But if you draw it to the point, so let me draw it to the point of the last higher high to be made, okay, you will have a higher risk to reward like I just showed you right here, okay, but the chances of price coming all the way from here, taking you out and continuing in your direction will also be high. All right, so those are the advantages and disadvantages of drawing either way, all right, of the trade bracket. All right, so now since we measured it and this trade right here is at least a 1 to 2, okay, like I showed you, okay, so you can go ahead and get rid of this, so you don't need it anymore. All right, what you want to do is you want to place your pending order. All right, and the pending order we're going to place is, so I'm done with this line as well. So the pending order we want to place is a sell limit. All right, a sell limit. So I show all this in those two videos, okay, so you just go ahead and just click on add order right here and go on sell, okay, so you will drag your sell limit order right here. All right, and your stop loss will be up here, right? The take profit will be down here. All right, so what that means is you won't be on your chart, okay, so as soon as you get the break, which you got right here, okay, as you can see, you got a break right here, so price will, so this is when you get a notification, you come back and place this pending order right here. So as soon as price triggers that, you won't even be on your laptop, because as soon as you place your sell limit order, your pending order, you close your laptop and just go and do something else, just close the charts. All right, so as soon as price comes back, it will trigger that trade automatically, okay, and as you can see, price came back, it triggered that order, then it kept on dancing around, it kept on doing all this, came back a little bit, pushed down, came back, it had actually reached the stop loss, but it did not, then it pushed all the way down, right? So let me drag this, all right, and as you can see, you got your exit. So let me get my arrow back. So the exit would have been right here, okay, exit would have been right here, 10th September 2025, 4, okay, so this is 4 a.m. in the morning. All right, so as you can see, it takes time for these trades, for the first of all, for the structure to form and the breaks to form, and also the take profit also takes time. So what you do is just place your sell limit order and just close your chart, okay. Maybe you could come back and keep monitoring your trade after 5 hours or 6 hours to see how it works, because as soon as you place your trade, there are two outcomes, okay. You can either lose or win. That is it. All right, so before I close this video, I want to mention something. All right, so we said we want to be checking our chart in time intervals, okay. So let's say you checked your chart after 3 hours or after 4 hours, okay, and price was right here, okay. So this will be the last higher low to be made. All right, so you place your alert right here, okay. So let's say you checked after 4 hours again, okay, and price was right here, okay. So this right here would have been our last higher low to be created. So you will delete the alert that you placed right here and you go ahead and put the alert right here, okay. So let's say you checked your price. So let's say you didn't catch this, okay. So let's say you checked your chart after 4 hours and price was right here, okay, that it had already broken the last higher low to be made. All right, so you just go ahead, so you don't need to draw your alert because it has already broken that, right? So you just skip the alert and just go ahead and put your just go ahead and draw your trade bracket, then go ahead and measure this trade. You first want to qualify it. Is it a 1 to 2? Then take the trade. So let's say it had broken all the way. Let's say you check your chart after 4 hours and we're just checking in time intervals, okay. So it had already broken that higher low, then it also had already pulled back, okay. So you will measure that trade, okay, and then see if it's a 1 to 2. So you will draw your trade bracket because you want to know where your stop loss could be. All right, so as soon as you get to know your stop loss, okay, so you will place your stop loss, or you will place this trade, okay. But let's say you open after like 4 hours, okay, and price was all the way down here, you don't take this trade because it has already done all the actions, guys. That's why you need to familiar yourself with all the steps of this trade. You need to familiar yourself with all the steps of execution, guys. If price already did these breaks and pulled back already, and then it's going down, you're too late. Okay, you just wait for another setup. All right, guys. I said everything I wanted to say, and I'll definitely see you in another one. Bye.